Today is September 6, 2022. MetaMaterials / Torchlight Energy / Nextbridge has filed an S1A. So if you're an MMTLP shareholder, the S1A has been filed. So we'll be talking about the spinout, and I'm saying it's to a non-tradable, almost private company. It's not quite private, but we're getting there. So earlier we talked about MMTLP / Torchlight Energy / Nextbridge Hydrocarbons in 2 videos. Check them out. This is part 2 and part 3 of Thoughts on Oil. And on part 3 of Thoughts on Oil, we have an interview by John Berta, which is excellent. He basically tells you the story of what happened, and in his words and in his interpretation, and it makes sense. It makes sense. It's worth checking out if you want to know the story behind MetaMaterials and Torchlight Energy and how this play came into being. But the big news is, of course, that they filed the S1A, the registration statement, which is an amendment to the S1 that was already filed. I've got 2 videos about the S1 that's already filed. Check them out. The first video goes over it in detail. Lasts about a half hour. And the second video goes over basically common, what I believe are common questions about the S1. Okay, there's not that much that has changed with the S1, but the first thing I noticed is that with the S1A, there are still no dates. So once everything gets approved by the SEC, the dates will be filled in. But the important thing is that the SEC has provided feedback, and MetaMaterials has taken that feedback, and they've put that feedback into the S1A. So the only thing that's really left is for the SEC to approve it at this point. Some of the feedback that the SEC gave was about the smaller reporting company. And as a smaller reporting company, they don't have to file all the information that larger reporting companies do. In this case, they can provide a simplified executive compensation disclosure in their filings. They're exempt from Section 404B of the Sarbanes-Oxley Act of 2002. That's a big deal, and that's worth millions of dollars. And that takes out a lot of accounting. Nightmares that go on for larger companies, right? So that's a big deal. That's really key. They're not required to conduct say on pay and frequency votes, so that's a good thing. And they're also only have to provide 2 years of audited financial statements and annual reports rather than 3. So that's good. So that's excellent. So because they're a smaller reporting company, there's good things. The other thing that happened is that they added some info about quote-unquote blue sky laws, right? So previously, if we look in the old S1, they talked about this is in their summary section. In the new S1A, they say all necessary actions and filings with regard to applicable state securities or blue sky laws shall have been taken, and any material third-party consents necessary to commensurate spin-off shall have been obtained or waived. So basically, they're talking about blue sky laws here, and what does that mean? So if you go to Investopedia, you can see the blue sky laws are state-level anti-fraud regulations that require issuers of securities to be registered and to disclose all the details of the offerings. So it's good. I guess they left it out. They stuck it in there now, so you are aware of it. So that's part of the feedback that the SEC provides in the S1 filings. Further on down, I note that there's a slight increase in cash, and there's a slight increase in long-term debt if we look at the capitalization numbers. So as a result, that's good. So if we also keep looking on a little bit, we'll see that there's an update on drilling activity and plans. Okay. So this is really important. This is stuff I was not quite expecting, but it's been a while since they did their S1, so good that they've made some progress. During the 6 months ended in June 30th, 2022, we continued certain development activities to satisfy our drilling obligations for the fiscal year 2021 under the terms of the purchase agreement defined below, at a cost of $1,491,766. Additionally, we completed some pre-drilling activity for our upcoming 2022 drilling program, including surveying, permitting, road and pad site work at an aggregate cost of about $400,000 or so, with the principal goal of gathering scientific data from a strategy of drilling test wells. All wells were drilled with the intent of being completed and productive for hydrocarbons. Okay? We attempted completions on every well. However, we were unable to effectuate a successful completion on all of the vertical wells due to various problems. Okay? This is not uncommon with early wells of frontier exploration projects. 2 horizontal wells were successfully completed for hydrocarbons. However, both wells are currently shut in, waiting for hookup to a gas pipeline. Basically, they've got some natural gas. Okay, that's what the hydrocarbons is that they're talking about. They can make a lot of money from the natural gas. They want to make sure that natural gas is captured and sold and accounted for, right? The horizontal wells are basically fracking wells, right? They go laterally horizontal, supply a bunch of fracking water in there, create an impulse, which is basically an explosion, and that fractures the crust, and as a result, they free up a bunch of extra hydrocarbons, which come out. So, 2 horizontal wells were successfully completed for hydrocarbons. However, both are currently waiting shut-in for hookup to a gas pipeline. The remaining wells serve as freshwater supply wells, wells we maintain for saltwater disposal, or wells we expect to be plugged and abandoned. Pipeline hookups will occur after we have achieved additional successful wells to justify the cost of tapping into the gas pipelines. So, to do fracking, they need fresh water, and they need to dispose of the fresh water after the explosions have taken place and whatnot, right? So that's a saltwater disposal. So the good news is they don't need to bring water in by a truck or remove the water by a truck. They have wells to do that. So, good news there. They're planning to have additional successful wells and to tap into the gas pipeline that's very close by for them to use, right? Because they're near, I believe they're near El Paso. Natural gas prices are very high right now, and they want to take advantage of that to make some money off of that with that natural gas wells. So that's a good sign. That's a good thing. Further on in the S1A, we note that the G&A has dropped significantly. So in terms of expenses, their general and administrative costs have decreased significantly since 2021. So that's a good thing. They're managing their costs. Then they go on to their balance sheet. So they have a slightly improved balance sheet from a year ago, basically due to the increased asset valuation of the oil and nat gas properties. So that's gone to about 47 million. So total assets are up around 48 million or so. Okay, and their cash balance is down a little bit from a year ago. So from December of 2021. So that's fine. No big news there. If we look at their expenses and all that, we see that G&A has decreased significantly. So expenses do drop. So potential earnings are up compared to a year ago. They're still losing money though right now because they're not producing really. They're just testing and they're seeing what's going on. They're not in production. And compared to 3 months ago, and they also compare 6 months to the 3 months ago, right? So they're doing better than they were last year at the same point in time. The other thing they note is that they have some update on their loans and the loan agreement that they entered in with Meta. I won't go into this in detail. Check it out. It's on page F41. Basically, they've secured additional monies and they can pay back their loan is the way they're looking at it. In general, I view it as minor updates, and they have made the clarifications as the SEC guidance requires, so that's good. Now we're just waiting final SEC approval. At this point, basically the SEC said, you got to make these changes and you got to disclose all the stuff. And it's like, oh, gee, we forgot to disclose this or we missed that is basically the response from Meta. Here's all the information you asked for. Now, the SEC just has to say, approval. Good. Go ahead. That's all we're waiting for right now. At this point in time, okay, these are oil and gas properties. And at this point in time, it seems that federal oil leases are slowing to a trickle under the current president. This is an article by the Wall Street Journal that came out on September 4th. And it started making the rounds. So, they've leased fewer acres for oil and gas drilling in terms of offshore and on federal land than any other administration in its early stages, dating all the way back to World War II. I did not know this, right? Because, you hear that, hey, gee, they've leased less land, but it's because no one's asking for the land and all that. But if you look at the numbers, right, the numbers on the right show that they've leased almost nothing. President Biden's Interior Department leased 126,000 acres for drilling through August 20th, his first 19 months in office, according to the analysis by the Wall Street Journal. No other president since Richard Nixon in 1969 to 1970 leased out fewer than 4.4 million acres at this stage in their first term. And Nixon was on the low side, right? Look at this. It's tiny. It's tiny in comparison, right? Harry Truman was the last president to lease out fewer acres. Harry Truman, and that was at 65,000 acres. In 1945 to 1946, when offshore drilling was just beginning and the federal government didn't yet control the deep water leases that have made up the largest part of the federal oil and gas program in modern times. Okay, you see the numbers of all the various presidents. Okay, Reagan was the most, but our current president is far and away the least, right? He's practically almost zero there on the scale there. Mr. Biden, however, did pledge. So these are excerpts from the article. I'm not going to go over the entire article. Links are provided. You can check out the article yourself if you want. Mr. Biden pledged to stop drilling on federal lands as a candidate, saying the nation needs to transition to clean energy. He softened his stance as oil prices soared following Russia's invasion of the Ukraine, calling for boosting oil supplies to ease runaway inflation. But he has nonetheless spurned a leasing program that has for decades been a go-to asset for presidents looking to raise U.S. energy production. The president said he was going to stop leasing, and he's been remarkably successful, said David Bernhardt, an energy lawyer and former Interior Secretary in the Trump administration. Okay. Mr. Biden has repeatedly said he needs to transition away from fossil fuels to reduce greenhouse gas emissions that contribute to climate change. Quote, no more drilling on federal lands. No more drilling includes offshore. No ability for the oil industry to continue to drill. Period. That's a quote from Mr. Biden when he ran for office. And the way I look at it, if you look at the leases at the federal acres under lease for oil and gas, it has decreased dramatically under the current administration. And the way I look at it, it's promises made, promises kept. So, for once, we have a politician that has kept his promises. So, there you go. Next, part of what's been keeping the price of oil down is the release of the Strategic Petroleum Reserve. Okay, weekly ending stocks of crude oil in the Strategic Petroleum Reserve, we note has started dropping off a cliff there. They've been increasing slowly over time since 1985 and since their beginning, but now they've dropped significantly. What does that say? And as a result of that drop, we see that the price of oil is down $86.54 a barrel. Okay? It is below its one-year average of $91.22. Okay? The 260-day moving average is the one-year average. And the question is, do you think that oil will continue to remain below its 260-day moving average? I don't know how much further he can continue to use up the Strategic Petroleum Reserve, but it might not be available. And at that point, we might see $130 per barrel, and we might see more. It's hard to say. What does that mean for MMTLP? What that means is that Joe Biden is one of the greatest presidents around because he has, fortunately for us, kept the price of oil high, and that means that you will be making money if you are an MMTLP shareholder, likely. Okay, one-year average for the oil price is $91.22, which means that the calculated dividend for that, the value of the calculated dividend, you won't be getting this in cash, is somewhere around $57.52. Okay, the current price of oil is below the one-year average, so if you take that into account, it's somewhere around $52. Compare that to the current price of MMTLP, which is around $1.40 or so. So, still a very good deal, I think. So what does that say? This is the timeline, I believe, for MMTLP and NextBridge Hydrocarbons. The S1's been filed. We've got the updates, and we're just waiting approval. So we are here. We're between the S1 filing and the S1 being approved. I think we're very close to approval. And it's been a long, hard road for MMTLP shareholders. You've had to deal with short attacks. If you go all the way back to Torchlight Energy, there were short attacks out the wazoo, short attacks like crazy, right? You had to deal with people who can't believe about the incredible opportunities that come along or what the prices might be for these opportunities. Had to deal with tons of FUD. There are various delays in expected sales. We've had to deal with expenses and obligations like continuous drilling clause. And of course, there are always the shorts that have that are trapped and they want to buy your shares, but they want to buy them for little or no money. So when this thing actually goes, when the S1 gets approved, they will have a short time, in which case they need to close out those short positions, so they will have to buy it for whatever the price is. So I believe you deserve your gains if you held on to it all this time. So that's all I have to say about the S1A that's been filed. There are other people who have got some good takes on the S1A. Check them out. I believe that Uncle Smokey has an hour-long or a 2-hour-long live stream he's doing about it. So check it out. He's probably got Q's and A's in there. So yeah, check out Uncle Smokey's channel. I believe Roller Pigeons commented on it. But anyway, it's big news. S1's been out. I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. And yeah, that's it. That's all I got to say. Goodbye.